Hey everyone, welcome back to the channel. Today, we're diving deep into the silver market, breaking down the technicals, Elliott wave theory, and the key levels that could make or break your trades. I'm your host, and if you're into commodities, precious metals, or just want to understand the bigger picture for silver, you are in the right place. Silver has always been a fascinating asset. It's more than just jewelry or industrial metal. It's a barometer for economic health. It often moves with gold, but has its own unique drivers, like industrial demand and geopolitical tensions. Lately, silver prices have been on a roller coaster, hitting highs around $25 to $26 per ounce and then dipping back down, creating huge opportunities for traders who know where to look. Today, we're focusing on Elliott wave analysis to pinpoint the most important support levels to watch. If you're new to Elliott wave, don't worry. I'll break it all down for you step by step. Elliott wave theory, developed back in the 1930s, is a type of technical analysis that says markets move in repetitive cycles, or waves. These waves are driven by investor psychology, alternating between impulsive moves, which are the main trends, and corrective moves, which are the pullbacks. For silver, we're looking at the longer-term charts, like the weekly or monthly, to spot these larger patterns. The theory divides waves into two main types: motive waves, numbered 1 through 5, and corrective waves, labeled A, B, and C. Motive waves push the price in the direction of the main trend, while corrections go against it. To apply this to silver, let's look at its history. Silver's massive bull run from the early 2000s peaked around 2011 at over $48 an ounce. This was followed by a huge bear market that finally bottomed out around $14 in 2015 and 2016. Then, the recovery began, with new waves building up again. Right now, many analysts see silver in a larger degree wave structure, possibly even within a grand supercycle. Let's zoom in on the recent action. Starting from that 2015 low, silver began what could be wave 1 of a larger bullish cycle. Wave 1 often starts slowly, just building momentum. From $14 in 2015, silver climbed to about $21 by 2018. That was our wave 1. Then, wave 2 corrected, pulling the price all the way back to around $14 again, which is a common 50 to 61.8% retracement. After that, wave 3, which is typically the most powerful and explosive wave, launched from there. It sent silver soaring to new highs above $25 in 2020 and 2021, driven by incredibly strong buying pressure. Now, we find ourselves in what looks like wave 4, a corrective phase. Wave 4 corrections are usually more shallow and can take the form of triangles, flats, or zigzags. Looking at silver's chart from the 2021 high, it dipped to around $18 to $20, which fits nicely with a wave 4 pattern. But the key question is it complete? If wave 4 is done, we could be on the verge of entering wave 5, the final push higher in this cycle. However, if it's still unfolding, we need to be watching our support levels very closely to see if they hold. Support levels are crucial in Elliott wave because they often line up with Fibonacci retracements, trend lines, and previous price highs and lows. For silver, the most important support levels to watch right now are based on the potential end of this wave 4 and the start of wave 5. Let's list them out and talk about why they're so significant. First up is the $20 level. This is a massive psychological and technical barrier. On the weekly chart, $20 has acted as support multiple times since 2018. In Elliott wave terms, if silver is in wave 4, a drop below $20 could invalidate the bullish count and suggest a much deeper correction is coming, perhaps into wave A of a larger ABC pattern. But, if we hold above $20, it would confirm the wave structure and set the stage for wave 5. Why $20? It's also the 61.8% Fibonacci retracement from the 2021 high to the 2022 low, a key level where waves often terminate. Second, we have the $18.50 to $19 range. This is where silver bottomed in 2022 during that broader market sell-off. It's the 78.6% retracement level from the wave 3 high, another key Fibonacci zone where corrections often end. If silver bounces here, it could signal the completion of wave 4 and the beginning of wave 5. A break below $18.50 would be very bearish, potentially targeting the 2015 low of $14. but that seems less likely in the current bullish context. Third, another critical support level is the $16.50 area. This represents the 50% retracement from the 2015 low to the 2021 high. In Elliott Wave, Wave 4 often retraces between 38.2 and 50% of Wave 3. So 1650 is a critical floor. If silver were to fall to this level and hold, it could mark the absolute end of Wave 4, leading to a very strong Wave 5 rally. Below that, we'd have to seriously reassess the entire wave count. Now to make this more actionable, let's look at the daily chart for some shorter-term waves. Within the larger Wave 4, silver might be in a smaller degree correction, like a triangle or a flat. For instance, from the recent high of $25.50 in early 2023, silver corrected down to $22, then rallied back to $24, forming what looks like a smaller ABC pattern within the larger Wave 4. The support at 22 held, and now we're testing higher. The next immediate support to watch is 23.50, which is the 61.8% fib from the recent swing low. Elliott Wave isn't just about drawing lines on a chart, it's about understanding market psychology. Wave 1 is optimism. Wave 2 is doubt. Wave 3 is euphoria. Wave 4 is complacency. And Wave 5 is mania followed by exhaustion. For silver, Wave 3 was euphoric, with soaring industrial demand and ETF buying. But Wave 4 has brought complacency, as investors just wait for the next catalyst. The most important thing is to watch volume and momentum indicators like the RSI or MACD to confirm your wave counts. If silver breaks convincingly above $25, it could confirm that Wave 5 is underway, with potential targets of $30 or even $35 based on wave extensions. Wave 5 often equals the length of Wave 1, or extends to 1.618 times Wave 1. Since Wave 1 went from around $14 to $21, Wave 5 could potentially push silver to the $33 to $34 range. But our support levels are what protect us against the downside risk. Another layer we can add is channel analysis. Silver has been trading in a clear ascending channel since 2015, with the lower trendline connecting the lows. Right now, that trendline support is sitting around 1950. If it breaks, the channel is invalidated, and we could see a much deeper pullback. Geopolitical factors also play a huge role. Silver is sensitive to US dollar strength, inflation, and events like mining disruptions. With potential Fed rate cuts on the horizon, silver could get a major boost. In Elliott Wave, these external events often seem to coincide perfectly with wave completions. So for traders, the strategy is clear. Look to buy dips at these key support levels, with stops placed just below them. For example, if silver dips to $20, you could consider a buy with a stop at $18.50, targeting a move back to $25. You can use options or futures for leverage, but always manage your risk. In conclusion, the most important silver support levels to watch are $20, $18.50, and $16.50 on the longer-term charts, and $23.50 on the daily. Watch for signs of wave completions and use indicators for confirmation. Silver's next move could be explosive if Wave 5 really is about to begin. What do you think? Is silver ready for Wave 5? Let me know your thoughts in the comments below. If you liked this breakdown, please subscribe and hit the bell so you don't miss our next update. Thanks for watching, and I'll see you in the next video.